Hey, it's Adam Anderson, owner and founder of WealthGuard Advisors, here with Blake Anderson. I just want to remind everybody that past performance is not a guarantee of future results, and we may or may not own or want you to buy or sell the stocks that we were talking about today. So read the disclosures carefully. Hey, Blake, let's talk about the S&P 500. We had an interesting week last week, really changed some dynamics. Let's talk about that.
Yeah, so obviously S&P 500 is up big today. It's quite a contrast to last week, where we had a couple really down days. And this is because of the turnaround in Congress. They're figuring out this government shutdown looks like it's ending. So I think this is really just a good reminder for all of us to not, base our market assumptions on, day-to-day news cycles. Obviously, there's always going to be the next big worry in the news cycle, and so to keep a longer perspective on things, and really focus on company earnings, which have been very strong, and the overall health of the economy, not any day-to-day thing going on, especially in Congress, which is so fickle.
Yeah, so last week there was a lot of, the government shut down, or jobs reports and stuff that really put a lot of fear into the market. So we saw the market come off of its highs pretty significantly. And last week we talked about, staying the course. It's about time in the market, not timing the market. And so we saw this come down. And interesting enough, we came right down to the 50-day moving average here on the 6-month chart. And it just ricocheted right off of that on Friday. So it created this tail here where it went just below it, then came up, actually ended up positive, and then we have a nice gap up today, which is a really good sign. We do have the government shutdown ending, and so it takes that pressure off. It means we're going to get accurate jobs data, and that will help us in our, knowing what kind of information we have out there. So, we still feel like the overall trajectory of the market is upward. We saw a nice little downturn. Today, I'm in the market every morning when Blake and I come into the office. We go through all of our account holdings to see how they're performing, how they're behaving. We do that on a daily basis. And there's just a ton of names. We were like, what should we talk about today? There's so many names we could talk about that are interesting. We feel are good setups on the heels of this downturn and resting on this 50-day moving average. So one of the ones that we want to talk about has been a long-time holding of ours, and that is Eli Lilly, symbol LLY, pharmaceutical company, American pharmaceutical company. And Blake and I started buying this. We're trying to figure out how long ago it was, but probably 7 years ago, before the GLP-1 phenomena. We were buying it because their diabetes medicine, Mounjaro, is having great results, and they realized people were losing weight on that, and they turned it into a weight loss drug as well as treating diabetes. So we've held a long time, and we've done quite well on it. But the last 18 months has been pretty torturous, just going kind of sideways, kind of downwards, little fits and starts. And I think this is just a real testament to staying the course and holding on. We did take profits and we did sell some at some points in here. But if we look at this now, we're all of a sudden within just a very short period of time, 90 days, 3 months, we just went up 50% and went into new highs. As a matter of fact, Eli Lilly is almost $1 trillion company. They're just short of being $1 trillion, joining the $1 trillion company club. So, I thought this was kind of an interesting testament to long-term investing and staying the course. Over a 7-year period, we've made astounding returns on this account. The last 18 months, very challenging. If you look at some of the performance on the accounts, the numbers are lagging. And here we are in just a short period of time, already back at new highs. Anything you want to add on that before I want to talk about the dividends on this, Blake?
Yeah, I just highlight that it really is a story of time in the market here. We didn't know, on any given day or week what the ups or downs were going to look like in the company. Obviously, in the last year, we got a number of different reports where, their competitors' weight loss drug is slightly better, or their weight loss drug is slightly that are in terms of like, oh, we did 13% weight loss versus 12% weight loss and things like that. And those had impacts in the market. But overall, the company's been very strong, lots of growth. We're going to talk about dividends. Earnings were always very strong. And that's why we like to stay in companies for a long time to let those, day-to-day fluctuations work their way out. And, just a case in point of that, if we look at the last 3 months, which was a 50% return basically from the last quarter's earnings until this quarter's earnings about a week or two ago, it was up 50%. And pretty much all of that 50% was within 3 weeks out of those 3 months, was all those returns. And otherwise, it had ups and downs and sideways outside of those 3 weeks. So it's just a matter of staying in strong companies, and over time they work for you, and not having to catch every little up down and be spooked out by every, news cycle that happens.
I mean, when we time the market, you got to be right twice. You have to be right when to sell, and you have to be right when to buy. And so you got to be, the stats are against you. Whereas, stay in the high quality companies, stay in the course is usually the best result. Obviously, if there's fundamental broken company issues, then that's something to get out of it. But this is not a broken company. This is a company that has a great product, great pipeline, great earnings. They're the largest, probably the most successful pharmaceutical company in the United States. There has been that pressure on it from, the Trump administration wanted to lower pharmaceutical prices. That's a lot of why this was selling off here. The Food and Drug Administration kind of put a lot of pressure on them. But I did want to talk about dividends. This is really an interesting thing that we have here. So if you see here, it pays $1.50 per share, which is not a big dividend. It's less than 1% of the share price is what it pays. But this is just a 3-year chart. It was at 98 cents 3 years ago. So your dividend has increased, if you're one of those people that's been holding it for 3 years or more, has increased by over 50% in just the last 3 years. And this is one of the things I found with some of these companies that they keep increasing their dividends, and you hold on to this. As time goes on, that dividend it starts to become something pretty significant. So I thought that was just interesting. Now, this is good anchor type of stock hold type thing. We do want to talk about a speculative stock. And we usually say, hey, if you're going to speculate with a small portion of your money, have a stop loss. But the financial industry has been very rewarding lately. And I was just looking at, a lot of the big money center banks, the JP Morgan Chases, Citibanks, and Bank of America, Wells Fargo, all that. But on the fintech space, also very competitive space, but there's a little small company that we watched, and we think it's got some merit, and it's called Dave. And this is a online bank, and this is a longer chart, but I wanted to go to a shorter chart. So I really like that it's been in this base. We just saw the longer chart, but now we're in 6-month chart. It's been in pretty flat for 6 months. They just had their earnings come in. They estimated $1.67 a share, and they came in at $4.24. That is a big beat. They got earnings. So they're about a $3.3 billion market cap right now, which in the world of finance, still small, but this is technology mixed with finance, which I kind of like that. Interest rates are coming down. That helps finances. They're trading at 26 times earnings right now, which is in line with the S&P 500. So I'm of the feeling that it is up 7% today, but I'm of the feeling that this could be breaking out of a base. Now, it's one of these ones that you'd want to watch, be careful with, no dividend. Anything that you want to add to this thought and idea, Blake?
Yeah, I just, we talk about long-term investing and then go over to a much more speculative position that we do have to watch closely to make sure that the assumptions behind this growth hold. Because really this company is valued, and the the bull case for it is based around whether their tech-focused banking does end up being adopted, like we should expect. The growth that we're baking into this valuation is pretty high, and so that's something that we do have to watch more carefully and make sure that those growth estimates are met over time. And so that's just things to watch out for when you're taking these more speculative positions.
And it is important to have some kind of stop loss strategy, that if you are speculating in the stock, that you have an exit strategy. Now, the ideal time frame holding, like we talked about with Eli Lilly, is forever. That's a Warren Buffett quote. This is when, if it doesn't work out at the beginning, a lot of times timing was right, it just didn't work out, and it's good to run away, live to fight another day on these speculative names. So we gave you a little bit of a dichotomy of, what we like to, our ideal situation, high quality stocks, anchors, hold on for long period of time, but also have this opportunity to these companies that do go up 7% a day like this one does, and have that, that phenomenal growth that you could sometimes see. So we do mix it up, but this would be a smaller percentage of the portfolio. So this, what we call bringing alpha to the portfolio, if we can, but to have an exit strategy. Not all of our clients are aggressive investors. Matter of fact, the majority of them are very conservative investors. One of the things that we like to do is a very large percentage in bonds. We use stock options to bring value or growth to the portfolios potentially. So if you're a person that's a low risk investor, you're like, all those stock bonds, I don't want to be on a roller coaster. I want to have more consistent, reliable, predictable types of returns on my portfolio. That's something we could also talk to you about. Blake, you want to just kind of close this up here real quick?
Yeah, I'd just like to highlight that WealthGuard Advisors, our firm, is a registered investment advisor firm, and part of that is a fiduciary responsibility to our clients. So we're committed to always putting our clients' interests first and working with you to determine appropriate financial goals and how to best achieve them. We work on a straightforward fee-only basis, no opening fees, no exiting fees, just transparent pricing for the services we provide. So if you're ready to discuss this and take the next step towards a confident retirement, we'd love the opportunity to sit down and talk with you. Thank you so much for watching, and we'll look for you next week.
Yeah, thank you for watching. We update the market every week, give you usually a couple ideas. Please like, share, and keep tuning in. Thank you for your time.